This may shock you. Your mortgage payment will go up after you close on your loan. It will change over time and it will go higher. Well, Michael, I'm going to do a fixed rate mortgage so my payment won't change. Well, in one way you're correct, and in a second way you're wrong. When it comes to the principal and interest that you are paying, if you have a fixed rate mortgage, you are correct. The total amount of your principal and interest added together will never change over the life of that loan. It will be the same from payment number 1 all the way to payment 360 on a 30-year loan. The issue is your payment includes other things besides just principal and interest. Most people have their taxes and their insurance escrowed in their mortgage payment. And taxes unfortunately change from year to year, and insurance often does too. But what does that mean? How am I going to plan for this? Well, the changes that you see may not be dramatic, or they may be depending on what area you buy in and the value of your home. But all I can tell you is what to expect on those changes. When we first close your loan, you're going to have a principal and interest payment, a taxes payment, and a homeowner's insurance payment, all rolled into a single number. If and when those two payments, taxes and homeowner's insurance, go up, that number is going to change. Let me explain how that happens. Oftentimes, the tax assessor will evaluate the value of your house, and even though your tax rate is the same, if your house goes up in value, the actual amount of taxes that you owe will increase. Let's say this year you're paying $1,500 a year in taxes. Next year you might be paying $1,600 a year in taxes, or $1,700, depending on how much the value of your house increases. And here's where the frustration can come in. Your mortgage servicer, the one you're going to write your checks to each month or make your electronic payment to, they won't necessarily know about that ahead of time. Here's how they find out. When you own a home, you're going to get something from the tax assessor in the mail that tells you the new value of your house, the tax rate, and what your total taxes will be for the upcoming year. That information is typically not sent to your loan servicer because the tax people don't necessarily know who's servicing your loan. So how do they find out? Well, they're going to pay your taxes next year, but guess what? They've only collected $1,500 and your new tax bill is $1,600. So where's that $100 going to come from? Well, this is how your payment goes up. Your loan servicer is going to send you a letter and they're going to say, we've evaluated your escrow account and we had collected $1,500, but we owe $1,600. So we have made that $1,600 payment for you. Now, you can either A, write us a $100 payment so that we're made whole and increase your monthly mortgage payment by 1/12 of $100, about $8 a month. Or you can take the $8 a month that you're behind over a full year and add that $8 plus the $8 for the new taxes. So your payment, if you don't pay the $100, would actually go up $16 a month for the next 12 months. So you went from $1,500 a month in taxes or a year in taxes to $1,600 a year in taxes. And that $100 that you needed to pay from last year, you either write a check for or it gets added to your payment. But also the $100 for the next payment is added as well. That may sound a little complicated, so you might need to talk through it. And if you do, just go ahead and give us a call. What about homeowners insurance, Michael? That number is also paid as part of your mortgage statement for most people. The exception to either of those would be if you ask your loan officer if you can waive escrows. If you waive escrows, it means we're not going to collect the taxes and insurance on your behalf. They're going to be yours to pay. They won't be calculated in your mortgage payment, and therefore your mortgage payment will always be the same because all you're paying is principal and interest. So back to homeowners insurance. Each year, your homeowners insurance company can increase your rates. They don't always do it, but sometimes they do. And again, when they do, they may not notify the mortgage company. Now they know who your mortgage company is because on the insurance policy, it instructs them who to pay if there's a loss. And as long as you have a mortgage, they're going to check with the mortgagee as well as you, and they're going to issue a check to both of you to make sure the money that you have from the insurance gets paid to restore that home in which they have a security interest. But they may not go look at your mortgagee clause to see who your mortgage person is and notify them of your change in insurance. In which case, the exact same thing happens we talked about in your taxes. If your insurance goes up at the end of the year, the mortgage company analyzes your escrow account, comes back and says, hey, you're short this $100 because your insurance went up, and now either you have to pay us that $100 and go up $8 a month, or you can not pay us anything today, but we're going to go up $16 a month to recoup last year's as well as next year's. So when you sign on the mortgage dotted line and you think this is my mortgage payment forever, if you only have principal and interest involved, you should be correct. It should never change. But if you're like most people and your taxes and insurance are being escrowed, then your mortgage total payment is going to change because your taxes and your homeowner's insurance will change as well. Now, Michael, what happens if my taxes go down? Well, if that happens, let me know where you live because I probably want to live there as well. But if they go down, they make the same change. They'll find out that there's too much money left in the escrow account and they'll cut you a check back for the difference. One final thing, whenever you pay that loan off, whether you refinance it or just pay it off over the full term of the loan, you'll get a refund for whatever they're holding in your escrow account on your behalf, but it will then become your responsibility to pay your taxes and your insurance on your own. I know that's a lot to digest, and I know it might shock you that your mortgage payment can change. So if you want to talk to somebody about it, really simple process, just pick up the phone and call the number on this video and you'll be able to talk directly to us at Weber Mortgage.